joining us today again for this roundtable discussion. The subject that we are taking up is very interesting. It is about the changes in the CIRP that are needed with two purposes. First is to reduce delays, and the second is to improve resolution value. So there are 14 proposals which are contained in IBBI discussion paper dated 27th of June 2022. And to take them up in seriatim, we have Ravi Prakash Kanti sir here with us. Sir is a senior IP. Uh, uh, just a second. So sir is a senior IP, and sir is also director at Resolve International Private Limited. So with that very brief introduction, I will request sir to kindly start the discussion. Sir, over to you.
Thank you, Nitin. Welcome to everybody on behalf of ICSIIP for another round of discussions on various discussion papers that IBB has floated in recent past. We will follow the same format that we used to do earlier, that we will take up each proposal. There are 14 proposals here. So what I intend to do is put each one on the screen, a brief capture from the discussion paper on the rationale behind that proposal, then the specific regulation which has been proposed to be amended, and then after that throw the open for discussion after each proposal. Anybody who wants to speak or make a comment or say something, please use the raised hand symbol. That would be the best way to draw my attention, so that each one of you will be recognized. Everybody will get a chance to speak. Having said that, let us start without wasting any more time. So the basic rationale behind the entire paper is, I think it's borrowed from project management, that basically activities which can be carried out in parallel, subject to resource constraint not being there, should be done so and not sequentially as is being done at present. So what the board has done based on feedback from various people is to analyze as to which of these activities which are necessary to be carried out during the entire CIRP period can be done parallelly without getting affected, which means that they are not dependent on a previous activity being completed or some information being received. So based on that, certain proposals have been made. And the basic rationale through all these proposals is this, that reduce the time and also improve the resolution value. Okay. So proposal number one, we go straight to that. And these are about changes in timelines. Three specific changes are proposed. The first one is to the expression of interest. Now, for inviting EOI, what has been said in the paper is that the IM per se, that is the information memorandum, is not required at that stage when the EOI is being called for. It is definitely required at the stage when the request for the resolution plan, the RFRP, is issued. But till that time, if the EOI can be issued earlier, so you sort of gain that much time in the entire process before making. And also, what has been discussed is that the IM is probably the most critical document that will be issued to a prospective RA and should contain as much depth of information with as much accuracy as possible. And the present time limit of just 54 days, which is what is in the model timeline, in many cases has been found to be insufficient for a variety of reasons. So the idea here is to shrink the time for the EOI issue of EOI, that is the form G, basically, that is the date, and to expand the time for the IM. So these are the two proposals which go hand in hand, so that the activity of the EOI starts, and at the same time, the RP gets more time to prepare the IM. Yeah. The third change in the timeline part is related to avoidance transactions. And now it is not just a change in timeline that what is being proposed. There is a change in the way this entire avoidance thing is being looked at, because what is being proposed, there is a nominal reduction of 5 days, that instead of T plus 135, it will be T plus 130. But the second part is more important, that the resolution applicant is to be provided with a copy of the application filed by the RP for any avoidance transaction. Now, the rationale behind it is that if this will also be taken into account by the prospective resolution applicant while making a offer or a resolution plan. Peer, can you just mute yourself? Okay. So these are the three proposals which are there related to the timeline. And of course, the first two are just plain vanilla timeline limits. But the third one has what you call an aspect of that the application related to avoidance transaction is also a copy of that is to be given to the resolution applicant. Okay, so this is the proposal number one, changes in timeline related to, and along with that avoidance application copy to be provided. Yes, floor is open on this proposal. Just use the raised hand symbol, it will come up and I will recognize you. Anything? Anyone has anything to say on this? Yes, Devarajan. You are on mute. Please unmute yourself.
Only one question arising out of this. So the resolution applicant now need to consider this avoidance transaction and factor in his plan, in his outlay. Is it mandatory or it is again voluntary? I mean, discretionary.
No, it has to be factored in. It will now become mandatory that once he has got it, he has to say one way or the other. Whatever, what the RA shall do is not specified. The regulations don't say how the RA will address it. The RA can say, okay, it is there, you're doing it fine. I will not take anything of it. I will not pursue it. See, there are so many options available to a RA
Yes.
while giving the plan.
Yes.
And it is entirely the RA's discretion. What shall be the option?
So now arising out of this one more point. Like for example, in many cases, the promoters are themselves the RA and there are CUFE applications filed against them. So for them, it will become mandatory to address this. Otherwise, their plan will not be considered.
Yeah, now you have brought up a very interesting side question. Okay, it is like the googly and the where the application is against the person who is the applicant. Okay, the avoidance application is against the person who is the resolution applicant. How is that even to be treated? Okay, it has not been addressed in the code or regulations. But if I would say, okay, that requires a more time to discuss because there are many issues arising out of it. Today, we don't have that much time, but it's something which is tricky. And how to address that, I think, will be left to another day. Because
yeah, I thought let us all think over it. That's what.
Yeah, it's definitely a very important point, but it will require more time to discuss. A lot more of issues are there. MSME and whether what is it, who will take. Too many. I think it requires a discussion by itself separately. Vikram.
Raviji, so there is an annexure 1 attached to that discussion paper.
Yes, that is the 40A, regulation 40A right. Timeline.
And I understand there is a small typo error in that timeline. The last date, T plus 105, should be T plus 100.
Okay. Typo error, fair enough. Please, I'm sure they will take care of it. But go ahead on the portal and just mention that. Nitin, make a note of that.
Noted, sir. Noted.
Yeah, we'll take care. Anything else on the substance of what is discussed or what is proposed?
Only one point. Basically, now they are proposing 60 days by the time which the EOI has to be issued. Yeah. And 15 days have been given for the minimum period of 15 days for receipt of EOIs. I still believe that the 15-day period should be enhanced to at least 30 days.
You are saying that even this timeline should have more time, right?
Yeah. So basically, what happens that if you give 15 days time for submission of EOI, that is insufficient, and that actually ends up with the RPs again issuing in Form G. So if you have at least 30 days time for submission of EOI, then the probability of issuing another Form G will not arise.
I think fair enough, valid point that you must give sufficient time to respond. Okay, fair enough. Even though it is not the stage at which plans are given, but still 15 days
Actually,
might
most
be.
critical is that 15 days, what happens about 10 days time, people come to know that a Form G has been issued. By the time they have to submit a Form G, the EOI, the timeline is already over.
Fair enough. I think very valid point. We'll make a note of that. Very
One of the
valid.
benefit here is that, the RP also gets time to market the resolution.
Yeah.
I mean, this EOI and try to invite more number of participants. That time is today not there in that sense.
Right.
So basically, Ravi, in fact, the 60 days could have been even reduced to 50 days, no problem. But 30 days should be given for submission of EOIs.
Fair enough. Very, very well. Good suggestion. I think we can take note of that. Yes. Any other point? Okay. So shall we move to the second one? Because we have got 14 to go through. Okay. Yeah, this is the second proposal. This is regarding marketing. I think Vikram, you mentioned that, and Devarajan, that you need time to market, but now it's being made mandatory. And for all CIRP where the total claims exceed 100 crore, what is being proposed is that the RP shall prepare a plan or strategy for marketing of the assets of the city. Now, basically what this means is that it shall be a formal document. It won't be something just mentioned or in passing in a COC meeting, but a specific document which the RP has to make and get it approved by the COC, especially when it relates to certain cost, etc. COC also to give their inputs on that. Now, what is this supposed to contain? The details of the advertising platform. Where do you want to advertise? Okay. Now, Form G. Typically, what we do, we based on our budgets or situation, we go for possibly the lowest cost platform where the advertisement can be done. But here now they say if it is 100 crore or beyond of claims, then you have to decide which advertising platform it shall be. It would also mean that why you are choosing one over the other. I think that would be implied, though it is not stated, but obviously the implication would be why this and why not that. In addition to the ad platforms, other platforms and forums. The paper talks about disseminating wherever possible. It could be mailers to industry associations, for example. And they also talk about where the committee of creditors, that is the bankers, lenders, would also promote or advertise that through their own channels to their borrowers in whatever manner is feasible for them. Now, this plan is to be finalized by RP in consultation with the COC. And once finalized, whatever that plan, then the EOI shall be published in those platforms. Now, this ties up with this plan has to be made before the EOI is published. It's not mentioned here, but because it says specifically that it shall be, the plan shall decide where it shall be published. So which means if you talk of 50 days, for example, as one of the suggestions, then within 50 days, the plan should be ready. So that, and not only plan should be ready, it should have been discussed in the committee of creditors, voted upon and approved. And where the plan involves a cost beyond the routine ad for the Form G, in terms of need for professional services, that you want to engage a consultant for marketing the assets, etc., then that would obviously involve discussion in the COC and time. So these two factors also come in. Okay. And the specific regulation that they have proposed, that is this one, that is 36C, strategy for marketing of assets of the CD. The RP shall prepare a strategy, etc., whatever we discussed, consist of the measures. Okay, the red was a typo in the original draft, so I just made a note of that, nothing more than that. The second part is about creditors may propose. Okay, it is no longer, it's not binding on the creditors, but they can propose and include measures that they would take, which means that the creditors would take on their own. like advertising on the platforms which are available to them, whatever be the platform, their newsletters, maybe in-house publications, mails that go to their borrowers, mass mailing, they would have quite a few contacts with them. So this is the proposal. Yeah, open for discussion. Any issue anybody sees in this? Yeah, Vikram.
So, Raviji, my point was that, the language of the resolution is, the regulation is that the RP shall. Now the point is, there are instances where actually, the company is a kind of company where there are actually no assets, but the claims are in excess of 100 crores. And the COC also believes that no resolution is possible and no marketing is required. So if the COC believes there is no marketing required, then what is your view with that? Is the RP still supposed to do a kind of prepare as marketing strategy?
See, a marketing strategy might include not doing any marketing.
That is my question actually.
Yeah, you can see, ultimately it is a document to be given to the COC for consideration in a formal manner, that instead of the way it was very informal till today, like form ji laga diya, then not necessarily very coherent discussions take place in the COC. What the board is trying to do is bring in a bit of organized formality into the process, that you make a plan so that there is a document to be discussed, whether it will be agreed, not agreed. The RP can definitely propose and say there are no operations, there are no workmen, there is no machinery, all that is there is land which may have a, so there may not be any need for marketing, or it may be limited marketing, or we let us stick to whatever is the normal process. That can be the proposal. What is being said is that you please put it in writing so that it can be examined tomorrow, that whether it was
what
done.
are these platforms available? Do you will IBBI also provide the list of platforms which can be used, or it would be open to the RP to use any platform?
See, as of today, it is open to the RP. As far as liquidation is concerned, of course, they have actually tied up with two parties and made a platform available. We don't know whether something like that they will do it here. Whenever that happens, that will be additional. But as of today, as the proposal goes, this RP in consultation with the COC is free to use any platform which maximizes value.
Right. Thank you.
Yes, Devraj, you want to say?
See, arising out of what Vikram said, will it be a good idea to suggest that instead of the marketing being a function of the claims exceeding 100 crores, it has a correlation to the assets and the operations being there in the company?
That is not what is being said. Okay.
Yeah, no, I'm saying suggestion in terms of suggestion.
See, above 100 is shall, below 100 is may.
No. My
Nothing
question is
prevents
different.
you from making where the assets are, let us say, are there, whatever it is. See, once there are claims of 100 or more, they say you shall prepare a document. They have not said what that you shall do it in this manner and it shall do this.
My question is different, Ravi. My question is different. What I am saying is that instead of linking it to the claim, should we link it to the asset available in the CD and the operations of the CD?
See, that is a hazy, judgmental fact,
Yeah,
which is not in public domain. Claims are in public domain, verifiable fact. So always everything triggers in public, in law, are with something which is verifiable by a third party. Claim is a verifiable because it is published. So that is the reason claims, and see, claim is a dummy variable for asset. Let's forget about, our Indian condition, which is very special, but otherwise it is supposed to represent, ultimately asset. Yeah. Any other comment from anybody? Otherwise, we
good
take
afternoon. Good afternoon. This is
Yes.
IT Deepika B. Prasad.
Yes, madam, boliye.
Yeah, I'd rather say that this is a good suggestion because there are sometimes companies wherein, there is no asset base, but the marketing angle is very good because the company is rather promising. the business is such, or the pre-qualification if it's an EPC company, or there may be some other issue, some other thing which makes it very sellable in the market. And the COC's interaction, or rather I would say participation, would rather be good. So I think this is a good idea.
Yes. And in fact, what you mentioned is coming up as a proposal subsequently.
Okay.
About other things. It is there in the paper.
Okay. Thanks.
Yeah. Okay. Next proposal is, and this is, I think we have been waiting for this for a long time, that when apples and oranges could be part of a basket, because that's how the corporate debtor evolved over a period of time. But it's not necessary that every buyer will take both apple and oranges, including good ones and bad ones and sadhava. So now what is proposed is the resolution of the functional operating parts of the CD separately with caveats. Okay. So now they are going by the basis that RFRP can be reissued. So when the first RFRP fails, in the sense it doesn't get a resolution plan for the corporate debtor as a whole. Okay, because that is supposed to be the first attempt, that the first EOI and RFRP will talk of resolution of the CD as a whole only. Then the RP and COC are to be enabled to explore resolutions of part assets and businesses, which means let's say you can do it in core asset, non-core asset, functioning asset, non-functional. The corporate debtor is in the business of textiles, but has got a land bank of 100 odd acres, which is lying vacant, but nobody else is interested, but they want this. Things like that, depending on what are the circumstances. And the EM, that is the evaluation matrix, is then supposed to be amended accordingly. This determination is to be made only when the PRAs, now this is maybe a bit of a problem because it talks only of those who have already evinced interest at the EOI stage, the PRAs. If they show interest saying that, okay, we are wanting to make a plan, but we are not interested in the entire thing, can you give us part A but not B, or A and B but not C, something of that. Then in such a case, an enabling regulation is proposed. This 37A, which says the resolution professional, and the draft says creditor, but I think it should be committee, may, in cases where there were prospective resolution applicants expressing interest in the CD, but no resolution plan was received. Now, this is important, that there should not have been any resolution plan. Otherwise, if even one is received, it has to be voted upon first. After the time for submission has lapsed, explore to resolve part of the assets of the CD. Okay, so this is an enabler that if the first offering fails, it's similar to the liquidation, where if the first auction fails, you can reduce the reserve price by up to 25%. Okay, something similar. Or if the going concern fails, then you go into sale of assets separately. Something similar, the same concept. If the first one fails for the entire basket, then you can pick and choose and sell or offer them separately for resolution. And the RFRP shall be modified accordingly. Okay. Yeah. So that is the proposal. As I said, I think most of us were waiting for this, especially in specific types of industries where people definitely face problems in this. So comments. I will come to you, but since you have been there in the initial, Mr. Jain.
Yes, yes. See, my suggestion is that why to link with the resolution plan, even at the initial stage, when the RP or the COC sees that it has to be divided in parts, and where non-functional units are there, we can invite a separate resolution plan. So the initial stage itself, the power should lie with the committee to invite the resolution plan accordingly. Why we should wait for one opportunity and then go for this? It will be only wasting time. So it should not be linked with the receipt of resolution plan. This is my view. It should be initially itself the COC should be given power to go for a part resolution if they feel it is feasible and is required as per the requirement of the process, CIRP process. So the linking with this resolution plan, I think it's not good.
Yes. So basically what you are trying to say is that right upfront, go for this instead of waiting for one failure. Why wait even for that? If you are in, especially where the COC and the RP together can come to that conclusion that this can be done.
Yes.
And obviously they can. I mean, what is obvious to the outside world should also be obvious to the COC and RP. Absolutely. I think, yes. Yes, Deepika ji.
Yeah, I'd rather say this is a good idea, but there may be, some litigation on this, because always there are miscreants. If you put it straight for a plan like this, where there are, it may be sold in part, then there may be some, prospective applicants who might put in the litigation, or, otherwise also. Somehow it has to be circumvented. This is what I would like to say, because this can call for litigation. This is my idea. I mean, we need to put in some provision so that litigation is avoided.
Well,
otherwise, it'll again waste time. Yeah, otherwise it'll again waste time.
Avoiding litigation, I think, is janam mein to nahi hoga, but yes, some guidelines to
Yes.
the RP and COC, so that the RFRP is drafted in such a way that the litigation is minimized. It can't be avoided,
Yeah,
but
that's
it should be minimized. Yeah, fair enough.
that
Yes.
aspect has to be taken care of. That's it. Otherwise, it's a good idea. Definitely a good idea.
Yogesh.
On a lighter side, sir, that by bringing this resolution, it is accepted that passing of liquidation order is going to take a lot of time.
I don't know, because this is at the CIRP stage, which means that both as a whole, the whole basket and in parts have both been tried and both have failed. Then liquidation is supposed to come. That's the normal standard method. So I don't know how that is linked.
Actually, this period which is mentioned here is like passing of the resolution, recommendation for liquidation, and till the liquidation order is passed by the NCLT.
Oh, no, you are getting confused with something else. Okay, that is not this. This is different. That was
Okay.
that is sale as a going concern.
Yes.
वो अलग है, वो अलग है, ये अलग,
Okay,
ये वो
okay,
नहीं
okay.
है,
I'm
ये वो नहीं
sorry
है.
then.
हाँ,
Yeah,
वो liquidation regulation में था, and there is a corresponding here, but that
Yes.
is that this is not that. This is right at the beginning, at the AOI stage.
Mhm.
That where
But in
the
this case also,
Hmm.
if you sell part of the assets, then how do you deal with the other assets?
See, how do you is not the thing. It is supposed to come from them. Okay, and here the drafting of the RFRP is important, because if there are, let us say, the RFRP says there are part A, part B, and part C.
Right.
Okay. Two of these can be assets or businesses by itself, but the third has to be the residual corporate debtor, because company to ban nahi ho rahi hai and cannot be closed. Okay. So somebody has to take that. Now the question will come: common liabilities, ascertained liabilities, separate liabilities. It's not easy. Okay.
That's my point, that if you sell only part of the asset, then who is going to
So
take
this
over
is
the
an
company?
enabler. See, this is not shall. This is may. So, see, people have been crying about it. Apna problem with us IPs is that what we cry for today, when it comes, we cry against it tomorrow. दिया तो फिर ले दे, नहीं दिया तो भी है. Yes, Devarajan. You are on mute.
Yeah. The point is that here, of course, when they are talking of a resolution, what we need to understand is that it is not sale of assets. If there are many verticals, then one vertical could be hived off with the assets and liabilities, and a plan should be presented to revive that and run it. It is not akin to liquidation where you just sell off the assets. That is
No,
one point.
it is actually allowing for both. If you look at the
Resolve part of the asset, they're saying. They're talking of resolving.
yeah, but resolve. See, you don't resolve assets, you resolve businesses, right? The word
Yeah.
asset, the resolve is a euphemism to sell. Okay,
Yes.
we have to
But the
take
point
that
is,
in that. See, largely what is happening. I mean, the trigger for this is not real estate. Okay, let's be clear.
yes.
Because that is a separate paper by itself where they are talking of something much more comprehensive.
Yes.
So let's take real estate out of the reckoning here while we are discussing this. That's very unique. This is for others other than real estate. Okay. In such cases, there might be a factory which is functioning. There might be another factory which has been closed 10 years ago, but has land asset, maybe no machinery, everything sold off. And maybe some other land somewhere could be, or an office building, or some flat. Ye hota hai, these non-core assets are there. And the acquirer may not be interested. You might say, just give me that factory, Baba. I want that for my business. I am not interested in anything else. And somebody else might say, just give me the land which is there in that location, but not the other land. So it's not easy, but it's an enabler. See, what was missing has been given. Now it is between the RP and the COC to formulate the RFRP such a way that it is clear. See, if they want the board to make the RFRP for them, so fir hum log kis liye hain? They might as well be out, you know. Vikram.
Possibly, it may not be like that because the existing code already provides for a resolution plan permitting sale of part of assets, So that provision is already there.
Nothing is, in fact,
it's already there. So
yeah,
what I'm thinking
the
is that this could be
existing
possibly
code does not. No, it is not the code, it is the regulation only.
Yeah. So they have
Big
already
difference,
provided
code and regulation.
Sorry. Already there is a provision for sale of assets on a standalone basis as a part of a resolution plan. So this could possibly be not that, it could be possibly try to resolve
these are
business verticals are there.
Not that way. No.
Purpose.
No, the intent behind this is to, some of these are clarificatory. Okay, not all are new. This particular one is actually clarificatory because if I remember 35, right? Like regulation already allows you all.
Allows it,
but people were asking, how do we go about it? Okay, then they said, okay, we will tell you how to go about it. It's just that. Okay.
We will spoon feed you, right?
Yeah, we asked for it, no?
Yeah.
Vikram.
One other point is that now here we are talking about this particular aspect, and the second aspect is, for example, a resolution plan comes here. In the first stage, if a resolution plan comes, the COC is supposed to consider it, and they may either approve it or reject it. So in case they reject it, they have the option of reissuing UI for a fresh bid. At that time, they can possibly have this particular clause in terms of selling multiple separately.
At any time.
Yeah. So if not in the first stage,
there should not be a resolution plan, because if there is one, even one, it has to be considered and voted upon before you can go to the next stage.
Yes, but the point is, suppose that is not passed, then the COC has the power to reissue the UI once. Yeah. At that time, they can talk of multiple.
They can at any stage after the first stage. Yeah. That's it. There's basically what is being said at the first initial stage. Don't go for sale of parts.
Yeah,
that's it. That's all that is said. That this is something. This is not cast in stone. This might evolve after a year. Then say, okay, maybe right upfront. Who knows? Or maybe even now. Yes. So Vikram, you are waiting, and after that, Shamal, and then Mr. Dharmarajan.
So Raviji, basically, Regulation 37A1. The caveat is that no resolution plan was received.
Yes.
Now the point is, if the plan was received and was not approved, then still I think the COC or the RP has no liberty to then sell the assets in part.
Yes. No resolution plan received, or one which is received but not approved. I would say, I mean, this is my interpretation, that they are on the same footing.
Yeah, but the language is very clear. No plan was received.
Yeah, it's okay.
But the point is, if the plan was received and not approved, then we are in the same situation.
अरे भाई कितना clarification चाहोगे? Even this was not required because it is already there in another regulation.
Okay, fine.
Okay.
Number 2 point.
हाँ.
By the time you issue an Form G and you get the plans, normally the time period is almost over by that time. So having
You are
time
supposed to
read
give
the
Form G on the 60th day. Okay. And resolution plan is received on first one.
My point is that there could be situations where plans were received and it was negotiated with the resolution applicant, but finally no plans were approved. And by that time, you have already almost exhausted the CIRP period.
होता है ना. See, if and but, देखो दुनिया में if and but करते रहेंगे तो जिंदगी निकल जाएगी.
You can ask for exclusions.
And the last point I wanted to make is that if a city has unit A, unit B, and you get proposals for unit A, then ultimately how would you dispose of unit B?
Look, that is a problem. Yes, that it could be that one part has no buyer as a resolution plan.
Yeah, but is it tenable to only sell A and take B into liquidation?
Why not? Anything prevents? See, there is no specific bar in the code. The general principle of law is something which is not prohibited is permitted. Okay.
So unit A gets approved, resolved, and unit B with the CD goes to liquidation.
Can happen, but obviously when you are confronted with such unique situations which are, if you are in doubt, there is only one principle: when in doubt,
go to NCLT.
Yes. Mr. Shamal Bhattacharya.
Yeah, Raviji, I see actually the regulation 37(1) basically is nothing but importing surfacing.
You can call it anything. Okay, it is not surfacey. Surfacey is an in personam provision. This is not. This is in rem. Big difference between the two. You can't call them.
It is talking of resolving and selling the part of the assets actually. Basically, I don't know, but in this particular case, will the buyer get a clean title of the whole thing, or as is various kinds of thing will take place here?
That I think a lot depends on how you frame the sale document. How are you selling? Okay, this as is, where is, what is, whatever is, no recourse is a phraseology coined by resolution professionals because they are so scared of ki kal kya hoga, I want to be protected. But that's not necessary to be done that way. It can be clean without encumbrances. All claims shall be settled. 32A shall apply. Kar sakte ho na?
The second point is, if the resolution plan, I mean, somebody has already pointed out that why wait for resolution plan receipt? Why not in the beginning make it in different parts? And
okay, we have taken note of that. We have taken note of that. We will suggest that. Yes, we will take that into. Yeah. Mr. Dhanrajan.
Yeah, sir, good evening. So we were talking about reissuance of Form G. Where is the provision for reissuance of expression of interest? The regulations only provide for reissuance of RFRP once, and that too only those bidders who had earlier applied can participate. Practically, even I have reissued Form G based on COC approval, but the code and regulation doesn't provide for any reissuance of Form G. That is, if the COC decides to go for a fresh bid, that's not provided in the regulations at all.
Absolutely right. It is not provided. Even the drafting of this regulation and the text that the explanatory text that preceded it in the discussion paper talk of the same set of PRAs.
Yes, sir.
They do not talk of reissuance of Form G. They talk of reissuance of RFRP only. You are absolutely right.
Yes, sir.
Reissuance of Form G when there is no EOI or whatever EOI has come has got rejected because of not qualified. Obviously, you can reissue because it's a failure.
Yeah, but the regulation doesn't even mention about an option for even reissuance. All we are going practically based on commercial decision of COC. But because I have been researching quite a bit on this, and never have found anywhere that there is a provision for reissuance of Form G.
It's not there, and I think that I don't know why, because the board is aware of this issue,
Yes,
and
sir.
also what is happening in practice, because everything goes to them, right? All the
Yes, sir.
copies, etc. They are aware. There
Yes,
must
sir.
be a reason, and
Yes, sir.
at some appropriate time when they might amend it or come out why they are not doing it. So as of now, what you said is the law that Form G cannot be reissued, but one logical interpretation which nobody can find fault with is if you have not received a response, then
Yes.
you can't proceed further. It has become infructuous.
Yeah, that's what I said.
And
We
that
have done it. We have done it.
reissue is perfectly valid because it's a failed Form G, not a.
I'm coming to a case where, for example, if Form G was issued, there was a bidder, and COC took a commercial call, and they were not satisfied with the bid. Then the COC decided to reissue the Form G with and the bidder says, no, there is no provision in the code, you cannot reissue.
He is right.
Yeah.
He is right.
So here commercial decision is being challenged.
Yeah, he is right. But when there are gaps in law, especially in the subordinate legislation, okay, then in normal course, in law, the courts have the power to give direction.
Yes.
Inherent power.
Yes, sir.
So that's how it should be done. You apply, seek permission, then reissue Form G.
Yeah, that's what we have been doing actually. But I'm just saying this could have been made it simpler by having a provision for reissuance.
Fair enough. Fair enough. I think that's as I said, it's a long-standing problem. They are aware of it, I'm sure. But definitely, the more people write to the board, the more they will be aware that it is actually.
There is a provision for issue of Form G.
No, there is no.
Form regulation
only for RFRP.
4A.
That's RFRP, Vikram. We have discussed this one-to-one also. Koi Form G ka nahi hai. Where there are, see, Form G where no response is received or all the responses are disqualified, which is equivalent of no response, then people go ahead and because that is logical.
But practically they do it.
But if there is a response which is a valid response, and then you get a what do you call? Let us say you get a plan. Then can you reissue Form G because the plan is not good? Probably not. But suppose you get 10 UIs. This has happened, and you don't get a single plan. What happens? That is as good as no response received to a UI. If the person is not taking the next step, then it is as good as not having taken the first step.
Yeah.
But these are the things where not just the COC, but the NCLT should also be in the loop, not necessarily by way of IA, but at least by way of report. Okay, shall we go to the next one? Nitin, you wanted to say something?
Yes, sir. Sir, just thought about it. Sir, if somebody is interested in taking over an asset which was earlier secured with one of the lenders only, so in that case, are there more chances of litigation between the parties? Or, I mean, under 52, he has already given consent, and then subsequently.
No, 52 doesn't apply in CIRP.
I'm sorry. Okay, sorry.
Okay. But yes, lender consent for selling mortgaged assets separately, the entire COC consent. In addition to, see, if a particular lender has exclusive charge or one or more have, but the others don't, then you require the consent of COC as a whole, as well as specific consent of those who have mortgage on that. But that is general law, that is CPC applicable. Okay. Yeah, okay, let's go to the next one. All those who have finished talking, please, that raised hand symbol, please remove that. I am not able to do it from my side. Okay, proposal 4 is about early liquidation, when can the COC decide about early liquidation? The enabling provision is there. It's very clear. At any time, the COC can decide. That's what the code says. Okay, substantive power is given. But still, it was being questioned, why so early? Resolution is the objective, maximization of value. Even where early decisions were taken, the adjudicating authorities did raise questions. Okay. So now what is being proposed is to put in place some guidelines for that as to what shall guide the COC and in deciding whether to go for early liquidation or not. So one factor is that the CD being defunct or non-operational for 3 to 5 years. Okay. So less than 3 years doesn't come in. Okay. These are guidelines, but because they are guidelines from the board, they have sort of a mandatory flavor unless you can justify otherwise. The product or service offered is obsolete. Okay. Now, if you have a company which is making CDs, for example, just where there is no taker today, there is no market is finished, then obviously there will not be a resolution in such a case. Lack of intangible assets like brand value. I couldn't understand this. I have marked it. I don't know what this means. That if there is no intangible asset, you want to go for early liquidation? Or should it have been said that, when there are intangible assets? I don't know what it means, why that would matter. Okay, lack of intangible. Most companies don't have intangible assets. So why would that be a factor? But it is put there. Intellectual property. Okay, no qualifying mark adjective is used here. What is meant by that? That intellectual property is there or is not there? What is it? Okay. Then accumulated losses and depreciation. There is a reason I have put it in red. The idea is that while in practice, companies do get taken over or being acquired or sold only and only for taking the benefit of accumulated losses and depreciation, subject to whatever conditions are there. The intent of the law is not that. Income Tax Act is actually pretty specific as to when it can be done and when it cannot be done. And even for a resolution plan under CIRP, there is while it has not put a break on such a thing, but section 79 says that the principal commissioner shall be heard, which means the principal commissioner or his representative shall be heard when such a proposal is there in the plan. Okay, it's like, it's not an NOC, but shall be heard by the NCLT. Then they are talking of investments that are yet to mature. When these factors are there, then the COC can consider that let's go for early liquidation. Let's not waste time in going through the entire resolution process. The draft proposal is regulation 40D, decision for liquidation. It's reproducing whatever was said in the earlier part of the discussion paper. Goods being obsolete, technology being obsolete. Again, they are talking of lack of intangible assets like brand value. Okay, whatever. Maybe the idea here is that if there is even an intangible asset present, then there might be a resolution because somebody might be willing to take over only for that brand. Okay, and get the thing resolved. Intellectual property, I think the word, the adjective lack of would probably apply to intellectual property also, similarly to accumulated losses and depreciation, because there is one more proposal coming later which deals with accumulated losses. Okay, and these considerations are to be now deliberated upon, minuted, recorded, and included in the application for liquidation, which shall be submitted to the adjudicating authority. And this, of course, early liquidation, where the entire process of CIRP has not been gone through. Yes. Any comment?
Yeah, I had Raviji.
Haji, bolo.
So my point is that, we already have a provision in section 33 subclause 2 that the COC is empowered to, pass an order for early liquidation. Now,
Yes.
the provisions of regulation 30D says may, the COC may. So COC may or may not provide any reasons for early liquidation. Because the point is, the moment you give a reason for early liquidation, that is again subject to a lot of litigation. Because suppose I say, or the COC says that the product is obsolete, and the promoters or the somebody can always, litigate that the products are not obsolete.
Well, that okay, being silent and giving a guideline of what you may put in your report and all that. I don't see how that, just because अरे मैं कुछ लिखूंगा तो litigation होगा, then
No, my point is, Raviji, that
it's not a logical.
No, what I mean to say,
Yeah.
that it is within
Promoters
the
will litigate whatever you do. Okay.
No, what I'm trying to say, that the decision to early liquidate is within the commercial wisdom of the COC.
Yeah.
And that is, not just but basically.
No, it's not. I think I gave you the background. Probably you are not listening. Let me repeat. This code very clearly empowered the COC from day one that you can go for early liquidation at any time. Any time.
Absolutely.
Okay, from day one, the day you first meet, till the resolution plan, which is already submitted to adjudicating authority, is approved. You can recall that. That power is there. It is in explicit terms. But there were practical problems being faced by people. Okay, when early liquidation was sought, in many cases, they were being questioned by the NCLT as to why you did not do enough effort. I mean, that generally boiled down to that the RP basically took the easy way out, or the COC took the easy way out, or you are in collusion, or things like that, or basically laziness. So what the board is trying to do through this is not give something new. They are not. They are giving certain guideline factors where in relation to that section. If you are using the power of that, these are the things that you may consider. You may consider something else. Nothing prevents you from doing it. Okay. And also that you have to give a reason. See, COC said, COC koi Mughal Badshah nahi hai. If they come to a decision of liquidation, liquidation is not supposed to be an easy decision. The whole idea of bringing IBC with a CIRP stage is that there shall be reasons given for corporate debt. So that's fair enough. I don't think that is a.
But the language used is may, it is not shall.
Yeah, it is may. It is may. And deliberately used. There is nothing wrong with that. You may consider this. And you may consider something else. Okay. But whatever you do, whichever factor, this or something else, you shall record it. That is shall. Or rather may, but because it is that anything may for the RP is equivalent of shall. Itna yaad rakhna. There is no may available for RP.
No, but this is may for COC.
No. Submitted in application for liquidation order karta kaun hai?
That is fine.
तो इसके लिए बोला by the resolution professional. Okay. Yeah. Anything else? Yogesh, you want to say something? Your hand is still raised. If not, lower it. Okay. So we move to the next one. This is number 5. And this, I think, was what Yogesh was mentioning, compromise arrangement after COC approves liquidation. Now, this is to be read with the liquidation discussion paper. The same issue was there. So they are just tying up both the things because they need, provisions in both here and there, how it shall be done. There, the time was cut down from 90 to 30, that the exploratory period. And what now, this is based on practical, on the ground scenario as of today. It may change tomorrow. That after the application for liquidation is made, till the time the order comes for liquidation, significant time elapses. It's minimum of 2 months, and it could be even 4 months, 5 months, 6 months. The idea is that the RP and COC shall not waste this time. They can use this to explore compromise and arrangement. Okay. So the RP and COC should begin exploring the option during the period it awaits the AA's approval. Okay. Now there are issues with the wording of this. I'm sure people will have comment on that. If a compromise arrangement is reached before the order is passed, then the RP-COC can file an application seeking approval for the arrangement in place of the liquidation order. And what is the draft regulation that they talk of? Is 39CA, assessment of compromise or arrangement. Liquidator may explore proposal of compromise or arrangement under section 230. Now, keep in mind, this is specifically talking of section 230 compromise and arrangement. It is not talking of sale as a going concern under other provisions, which is the provisions of the liquidation regulation themselves. Okay, comments.
Sir, as regards the language of this regulation 39CA, it says where the committee has decided to liquidate the corporate debtor under section 33 and the application is pending before the AA for approval. So at this stage, the liquidator has not come in place. The RP is there. They're saying the committee may recommend the liquidator to explore proposal of compromise or arrangement.
Good one. Pakad liya. It has to be the RP, right? Absolutely right. The wording should be RP. And then the problem comes, does the RP have the power? But here, what is being talked of is explore. Now, explore, anybody can explore, whatever, and you can call it a section 230. The ILC actually considered this entire thing. If you go back in history, the idea of using section 230 or some sort of that during liquidation came out of judicial interventions over a period of time. Companies Act 1956, 2013, even prior to that, and hardly anything really happened. Okay, if you look at the entire history of winding up in India, there might not even be a handful of cases which actually got resolved by using the compromise arrangement section of Companies Act. Be that as it may, now that also came into IBC via enclave judgments in 2-3 cases, Shivram Prasad and few others. That point was considered by the ILC in one of its reports. And the ILC was very categorical in saying they do not want 230 to come into IBC. I mean, in very explicit terms, that report said they don't want it. The parliament has not done anything about it. They have not made any amendments to the code to incorporate that provision. But still, because it's still precedent law in the sense that there is an enclave order which allows that. So these type of regulations are being attempted to basically crash the timeline, make use of idle time in between wherever it is coming up because of statutory reasons or because of the actual status on ground, and then see what best can be done. So as I said, all this discussion paper is all about trying to utilize time to the best extent possible and not so much about substantive changes. Okay, most of the changes are procedural, just to crash the time. Haji, Deepika ji, boli.
Sir, I would like to bring about here that while we talk of compromise and arrangement, the regulation says that in case the promoter is coming for compromise and arrangement, he has to pay for the expenses till that is approved or so in this condition, I have seen that whenever the promoters come with the compromise and arrangement proposal, they never want to pay. So if you tell them that you give a bank guarantee or please pay so that later on, there may be trouble, they may not pay because if it is failed. So in this case, how this will be managed? Because then we'll also cross the timeline. We'll start it much before the liquidation order is passed. Then how this angle will be handled? This is my question, sir.
I think one thing, of course, Nitin very rightly pointed out, there is no liquidator at this stage. So there cannot be a section 230, strictly speaking, except exploration. Now, exploration means what? It's not been defined. It could just be, talk to few people who were PRAs earlier. For some reason, it failed. What has been seen is that in most cases, it is one of the PRAs who comes up with the compromise arrangement at a later stage. And why? because by the time the original plan got rejected, obviously it would have got rejected for some reason. Then the COC realizes that they are not getting anything better. Chalo uske paas wapas chalte hain. So how to get it back? Okay, section 230. Usually, I mean, this is what usually happens. Okay. Now coming to the part of expenses, I think that regulation which you are referring to, which talks of the expenses during that will not form part of CIRP cost, it shall be borne by the corporate debtor. It says actually corporate debtor. Okay,
Yeah.
which means whoever takes over the company, it goes
Yeah,
into the
whoever takes.
accounting. Promoter giving section 230 would be only if he is otherwise eligible, na 29A,
Absolutely.
even 230.
Absolutely. Absolutely.
So,
Yes.
It can happen. It has happened.
In MSME specifically.
Yeah, and one of the reasons it happens is people wait. It is a test of patience. Who blinks first? So the promoter will wait if they want to give. Okay, till the COC members get fed up and say, yeah, chalo, we are ready to compromise. Now here the compromise is always on the part of the creditor. There is no compromise on the part of the borrower. So it is arrangement by the borrower and compromise by the creditor.
So the cost will be borne because it also says that you can file an application even before the liquidation order is passed.
Nitin, jara mute karo yaar jisko. I don't have the.
Ji sir, I'm just doing it.
Fat se karo. Don't wait for muting.
So I mean, it says that the application may be filed before the liquidation order is passed. So
Yes, it is confusing. This regulation is highly confusing. One, they have used the word liquidator. There is no liquidator in place, right?
Yeah.
Then they are talking of the process having actually got what can get completed in 60 days. Probably having a plan. Okay, that can happen. Somebody and what
you can be ready with the plan, but you can't file an application until I mean.
No, the application is saying that now this is coming. Okay, so you consider that compromise and arrangement. Now, compromise and arrangement cannot be considered in CIRP stage. So that means they have to order liquidation to consider the proposal of compromise and arrangement.
That's right.
And then reverse the liquidation order. So,
yes.
So, yeah, these drafting things are there. But well, one shouldn't take it too hard because people can make mistakes. And in fact, all these roundtables are only for that. If you see an error, please point it out. No.
That's okay. I mean, just that the clarity on this. Otherwise, it will become very difficult to operate later on. That is
true. Very true. Very true.
Yeah. Fine. Thank you, sir. Thank you.
Dharmarajan?
Yes, sir. Just a quick word on this section 230 of the Companies Act compromise option. Normally, what the intent is for the promoter to compromise, but we have seen compromise being used with a third party. So I don't know whether the intent of the Companies Act and this section, is there any mismatch? Or we
no, there is no mismatch. In fact, Companies Act also is very clear. Because see, Companies Act is not talking of resolution. It's a very wide term, compromise and arrangement. Kuch bhi. Okay. It can be something as small as capital reduction to anything as large as, sale of the entire company to somebody else, some other acquirer stepping in and anything in between. So the 230 is much wider than the parameters of resolution plan under IBC itself, which is why that.
Yeah,
there is no such
on creditor.
No, there is no such there has never been the intent that it shall be the promoter. And in case of IBC, it is very clear that it shall not be the promoter unless 29A does not apply. So that in Gujarat NRE Code has been clarified. Okay.
Fine, sir. Thank you.
Yeah, Devarajan, you want to say something?
Yeah. See, if you look at the current liquidation regulation, before actually the COC recommends a liquidation, you are supposed to decide what option from 32A to E is taken, which technically doesn't contain any recommendation under section 230. It only has got 5 other things without 230 coming in there. 230 is mentioned in liquidation regulation for the purpose of timeline purposes into the first 90 days and all. So this possibly is only filling that gap. Here, actually, the RP possibly is not being asked to explore a 230.
No, RP is being asked to explore.
No, the point is, you see this sub-regulation 2, subclause 2. The resolution proposal shall submit the recommendation of the committee under sub-regulation 1 to the adjudicating authority.
No, you see first of all, read one carefully. What does it say? Where the application for liquidation is pending. Mr. Patwal, Nitin, be a bit vigilant. Just mute. Yeah. Where the application is pending before the AA for approval of liquidation, the committee may recommend. Okay. That now if it's saying that the liquidator may explore the proposal, that is already covered, that the liquidator shall explore it in other regulations, before the 39 ABC. So here the wording regulator, because when you read the regulation, when the discussion paper on liquidation regulation, where the timeline was cut from 90 to 30, very clearly it was stated there that the same reason was given. Please use that time to do this. Okay. Now, this is two separate parts, RP and a liquidator. RP has no right for 230 at all, because that is only CIRP. Liquidator has the right by judicial decision, let us say, for whatever it is. Now, how can RP do anything except maybe exploratory? Exploratory is different, which means no action except, okay, I got 5 people who are interested, or could even be that I have received a scheme. See, somebody can submit a scheme suo moto. Nothing prevents anybody submitting a scheme. Okay.
No, what is the problem here, Ravi, is that you see regulation 2, see the resolution.
No, look at it from the problem. See, don't look at the intricacies of drafting and all that. They are there.
No.
Ye PhD karne ke liye nahi hai. Do you have a problem with the regulation?
Just give me half a minute. I'm only saying that the last word, sub-regulation 1 to the adjudicating authority while filing the decision of the committee of creditors under section 33.
Yeah.
Under section 33, you will file a liquidation, this thing. So where is the issue of, so the point is, are you saying that while filing that recommendation for liquidation, this also should go? Then there is no time.
No,
so you are not the intervening period.
You are talking of inconsistency between the two. That's a drafting error. Fair enough.
I mean, that is one thing which
you can't be doing it here. You have to do it at a later stage. First file, then explore.
Ravi, you're not audible.
Hello.
Ravi, you're suddenly gone soft, very soft.
So the volume is low.
Yeah.
Now, okay.
Very low volume.
Ravi sir, we are not able to hear you.
Hello.
So it's better now.
Now it's fine.
So it's better now.
Ravi, possibly try logging out and logging in. That may help.
Yeah, but now I think it's fine.
Hello, 1, 2, 3, 4. Hello, can you hear now?
Now it's better.
Yes, we can hear you now.
Yeah, okay. Something went wrong. I don't know what. Okay.
I only wanted to make one small point, Raviji, in this regard. That, irrespective of the drafting error, the object of this resolution, this regulation is very noble. No, actually you end up saving a lot of time in the process, because in the interim period, when you file an application for liquidation and you get an order for liquidation, nothing happens actually. So this time can be effectively used for resolution.
Yes, that
That
was
is
the
a very
idea.
good suggestion.
That was the idea. Yes, there are drafting errors that can be taken care of. Minor.
Correct.
Okay, so we shall move to the next one now. Okay, this is about contents of the IM. Okay. And the idea that is being propagated is that the IM shall be as close to a red herring prospectus as possible. RHPs which are done for market listing, with the same objective, give the maximum possible information to a potential acquirer or potential resolution applicant. Okay. So what is being proposed is certain things that should get included in the IM. Many people are doing this, but not all. So the idea is to give a guideline which is standardized across all the resolution processes that are conducted under IBC. That you give a picture of the business performance, business evaluation. That means how did the CD evolve over a period of time to where it is today. Key contracts. Now this is going into a bit of detail, which many IMs do not have. What are the key contracts that are important for the company and are there with them, including status of contracts where there might have been defaults in terms of performance or some issues raised to that, even that to be included. Industry overview, including sector fundamentals, etc., etc. So many things. Then they're talking of also incentivizing a PRA through brought forward losses in the income tax return. We had seen this earlier in the other provision, that they are referring to carry forward losses and depreciation. Input credit of GST, how much is available, it's an asset of the CD, obviously. Key employees and key customers, this now talks of human capital, which doesn't get reflected in the standard balance sheet, but could be a very important part depending on the type of company. Let's say project companies, infrastructure companies. People sometimes are more valuable than anything else, because the bulldozers and etc. you can hire, but not good people. Supply chain linkages, like if you're a power plant, do you have a backward linkage for input of coal, for example, forward linkage of a PPA, which is still valid, things like that. Power connections, are they still running? How much is due, etc. When was it last disconnected? So these are the things that are being proposed that should be included in the IM. And the IM timeline has already got extended. So assume that now you can do all these things. The proposed regulation covers almost the same things. Okay, whatever we talked of in the discussion paper. Any response, anybody?
I had only one very small point, Vijay, in this regard. My objection is to the word projected business plan.
Okay.
Who is going to give the projected business plan? Can the RP do the projections? No, but how can the RP do the projections?
I also agree with this, Raviji, Shantanu here.
Yeah.
No, I also agree with this, sir, because business plan to RA dega na. Ultimately, when
giving a projection is very difficult for the RP.
Yeah.
On what basis will the RP give the projection?
Means this, like if you're talking about a red herring prospectus and the asset in distress, there is you're comparing orange with pineapple, you know.
Very true, very true.
यहाँ तो आधा information तो most ofly मिलता नहीं है. And they are talking about this, you know, I know it's very idealistic paper, you know. It's a very idealistic paper, but I mean, it's like बहुत अच्छी theory है. Practice में I am right now handling a listed company. Everything is shut down. Electricity cut, accounts frozen all around CIRP.
Yeah.
Now, do I do that or do I make this nice, beautiful plan.
Make a nice, beautiful plan.
And nothing is there. Labor darwaje mein khada hai, you know.
Your skill would be assessed on what you can create out of nothing.
Yeah, I mean. So
Very true, very
this is
true.
very idealistic thing, but as if this would be misrepresentation actually.
Yes, it would be. It would be.
If I do a wishful thinking and make a nice plan, this will be misrepresentation. And this kind of a plan can only happen if the same management is giving the plan.
Absolutely.
So then remove 29A. Why are you keeping this 29A altogether?
No, the RP can never give the projections. RP can never give the projections.
RP can never give the projection.
RP is not competent enough to give a projections of the company because the person who is acquiring it can, do some projections. RP is not the person who is going to run the company.
Yes, बिल्कुल सही है.
ये तो बोलना चाहिए सर. ये तो.
Please make note,
ये तो बोलना चाहिए.
Yes sir. Yes sir. Noting it, sir.
Okay. What can be done, of course, is, and I think this is if there had been public business plans earlier, which had, what happened to those? I mean, that is history. To that extent, one can say, last time issue hua, ye plan tha, what was achieved, what was not achieved, why such a thing was not achieved. If there are some reasons which can be given, which
Sir,
are
most of the time, if you see in the annual reports and everything, they write. And why the business could not continue, why those things are there. Some of it is all purely from the promoter's point of view. ठीक है, वो तो लिखेगा कि बैंक वाला पैसा नहीं दिया तो मेरा बिजनेस बंद हो गया.
Yes.
वो तो फर्स्ट चीज लिखता है.
Very true.
So
the language is shall. The I am shall contain.
Shall. May लिखो यार. What is the shall?
No option for the RP. He has to now give a projection.
And what is the sanctity? Tell me. After the fellow has taken over, and I am demitted my office, then can they come and tell me कि boss तुमने तो गलत projection दिया था? Who is going to implement the plan? That means, are you going to make the RPA employee of that company or give him equity? And say, Baba, now you have made the plan, you take it forward. This has to be objected to, I feel.
Yeah. So
thanks. Please continue.
Objection, it is basically unimplementable.
Yes, whatever.
It just can't be done, so it should be dropped.
Yes.
There is nothing called projected business plan, very rightly so. And I couldn't understand key investment highlight. I don't know if anybody else did.
No, sir. See, this is all part of this DRHP. This is all part of a DRHP. जब IPO लेके आते हैं ये सब लिखते हैं. अब हम IPO कहाँ लेके आते हैं?
Anything past only can be given, sir.
Huh?
Anything past only can be given by the RP.
Yeah, RP can only give the past, sir. Future
so,
का क्या देंगे?
Even key investment highlights would refer to investments already made into the company.
Yes, yes, okay. Yes.
So only related to past existing as on ICD. No projecting. No projections.
Subject to available.
How can we project? That is the whole issue. How can we project?
Yeah, obviously can't. In fact, being involved.
Are we supposed to then engage a TV consultant? Then they should allow that. Engage a TV consultant, bring out a nice what can be done,
Sir, you can engage, but nobody will pay for that.
That is right. हमारा फीस नहीं देता है.
Chalo, okay, let's not divert.
Okay, let's not divert.
We are already at 5:30. We are still at number 6. Anything to do with brought forward losses in income tax return? Now, this is being proposed that it should be highlighted. Is it something basically in line with what ought to be done? I mean, okay, it's a fact. That so much is the accumulated loss. But on what date will you give? From which document that you will have? That will also have to be told as of so and so IT return of so and so financial year on so and so day. Last file, वही दे सकते हैं ना?
Sir, can I say something?
Haji,
Can I just say something, sir? This is Deepa.
yeah, go ahead, go ahead.
Yeah, so I think rather than making all this a part of the IM, we can put in a clause to give a marketing teaser along with the IM. That can be a mandatory thing to make a marketing teaser, because this whole thing is actually trying to bring about the value as a going concern over and above the assets of the corporate debtor. It is not something that is, a short thing. It's just a way of, trying to really bring out the investors for the company. That is what we are trying to do. IM is generally what we are talking about, the mandatory contents of the balance sheet, the things which have happened, which are certain. So now, what value?
Except for this projected business plan, which is futuristic, all others relate to past data. So to that extent, they can be included.
But this key employees and all these things. So employees may be there today, they may not be there tomorrow. So
that's okay. As on that date, okay, people they have to be. See, आज है मेरे पास, आपके पास क्या है तो मेरे पास माँ है. So it's like saying I have got something very special. I have got two people whose worth is more than what you can think of. It can, in some very rare case, if it is related to a pharma company with an R&D base, for example, the chief scientist is probably more valuable than all the equipment put together. And retaining that person would become
so
very important.
In some exceptional cases, yes, this may be true.
Yeah, that's right. It's exceptional. It won't be valid for everything.
No, yes, that's the point. It may not be valid for all.
But whatever is applicable, to the extent it is applicable, and to the extent that you need to tell. Sometimes it is only numbers. Like if it's an IT company, how many numbers you have? I mean, people don't ask each one skill kya hai. So
no, I agree with you. Yeah. There is a company with me who has very good customers. Yes. So, some parts can be highlighted though, but not for all. That is the point.
That's true.
Yeah. Okay. Yeah. Thank you.
Okay. Okay. Next proposal is with dealing with assets provided through a personal guarantor as part of the CIRP. It is not dealing with all third-party assets. This regulation or this proposal, it is restricting itself to assets of the personal guarantors only. Okay, assets belonging to promoters or any other guarantor who may or may not be a promoter, which is necessary to be included for resolution, which is also already mortgaged or charged to creditors for securing the loan of the CD. That means it is the same set of creditors who have given the loan, and the promoter or guarantor has given certain asset on collateral, which is also part of the CD's assets in the sense that it is being used. It could be the land on which the factory has been built. Very often this is the case. Okay. So that can be made part of the resolution estate with the consent of the mortgagee. Okay. And the charge holder, whatever you call that, depending on the type of charge. That means the creditor holding the charge on that asset has to consent. Then it can become part of the resolution estate. Resolution estate meaning similar to liquidation estate, though not defined. Okay. And this is the regulation 35AA. This is talking of relinquishment by charge holder. Now, in this case, the charge holder has to specifically agree to relinquish his charge on that particular asset and pull it into the entire resolution package, which is offered for taking a resolution. This is discretionary. May, okay, may choose to, nothing mandatory. Relinquish for getting better results. And the whole idea is that putting it into the basket will get better for everybody, including that creditor, than keeping it out. And the 36(2) FA is a consequential thing that once that is agreed, then that shall be included in the IM. Any comment?
Vijay, can I come in?
Yeah.
So my limited comment was that if the charge holder decides to relinquish, then will it tantamount to discharge of personal guarantees?
The personal guarantee is independent of the collateral.
No, so I'm giving an example. Suppose all my personal assets are charged to the lender. And basically,
not all personal. What is included here is only that which is necessary for the resolution of the scene.
No, I got your point. What I'm trying to say.
उसका घर, the सोना वो कुछ villa in Spain वो नहीं included.
No, but the point is, I actually had an instance where the resolution failed because the COC did not agree to relinquish the charge on the personal assets of the guarantors.
Can happen.
Right. So what I'm trying to say that if suppose the only asset of the guarantor is with the lender and that assets are now being relinquished during the CIRP process through a resolution plan, then will it tantamount also to a discharge of the personal guarantee is my question.
Yeah, you are asking a very important legal question which is not relevant here. So उसके लिए अलग से one-to-one बात करते हैं. It is not relevant here. Okay.
Yeah, but it is extremely critical here.
No, it is not relevant here because you are talking of what happens to the value. That is what the creditors call, na? वो अपना legal advice लेगा कि whether it will happen or not happen. Right. Why you as an RP are even concerned with what happens with the creditor's rights against his guarantor? कोई लेना देना नहीं आपको. क्यों सोच रहे हो? उसको सोचने दो ना. They are institutions. They can employ the best legal counsel in the country and get an answer. Why you and I should be bothered in our role as RPs? We have nothing to do with it. Whether it will affect their right against the guarantor or not. क्या करना क्या है हमको? Yeah. Anything else? Is it a good proposal or a bad proposal, or we just don't understand what is the proposal? Any one of the three answers is okay.
No, it's a good proposal, Raviji.
Acha, by the way, let me tell everybody who is there logged in कि CIPERs इसमें नहीं मिलने वाले हैं. So you can participate. Okay.
It's a good proposal, sir. It's a good proposal.
Fair enough. So nobody has a problem with it. Generally, you say, yes, the idea is good that the more the assets come into it, which are required and essential for the total package, then it definitely makes the life of the RA easier. Otherwise, the RA has to go off books and separately negotiate with the lenders for that asset, on which they have charge, which is essential. और जब तक वो agree नहीं होंगे, काम नहीं आगे बढ़ेगा.
But I think all the proposals have an intent of the COC and the RP coming together to resolve, which is rather a good thing. It is the whole intent is coming out like that. So nice, it is good.
Okay. This is about geotagging of asset. Now it is making it mandatory. Okay. And whether RP to geotag or because it is also referring to changes that will be made in the registered valuers rules, that or there it is rules, right? The board issues rules under the valuation provisions, but it is going to come as part of the regulation. That description of the asset will include the geotagging of the immovable assets. Now, if the RP has to get it done, how will it be done? Even if the valuer has to do it, how it shall be done? People with experience in geotagging? Mr. Shivnath, you want to come in? Mr. Shivnath? Hello?
No, sir.
Your hand is raised. Then
I am putting down it.
Okay. Anybody has any experience on geotagging? What is it? How is it done? Nobody? Okay. Kantanu? Okay, geotagging is basic. Shantanu. Yes.
Sorry, I was actually signing some paper to his
Ah,
I missed out this.
yes, yes. Geotagging. Do you have any experience? If you can enlighten.
No, sir. Absolutely none. I don't know what they're talking about. It is real sci-fi.
Okay.
But देखो साहब ये क्या है ना, somebody has lifted something from abroad.
Okay.
किसी ने बहुत अच्छा रिसर्च किया है.
Okay.
फॉरेन घूम के आया है. और ये लिख दिया है.
Okay, geotagging.
Very simple one-liner is that geotagging is basically through the current GPS, where tagging is happening.
That is there, sir.
You know, the truck fleet of trucks, they are all geotagged. That is how it is monitored these days.
No, that is GPS.
No, but how do you do that with
geotagging? Using GPS only. Geotagging is using GPS.
Yeah, I know, but geotagging is generally for immovable property, where when you are taking photographs of that, along with that, you take it through an app, which gives you the latitude and longitude of that. And all those who are directors in companies would know that they had to do this few years ago in that E3 KYC, Puthana, pre-KYC.
Yes, yes, yes.
You had to sit in your registered office, take a photograph, which will show the location of that. That is basically geotag. What is being asked for is that, that's why they reference to the valuers rules, because when the valuers go to the site, to the site visit, they will probably ask to take photographs, which will include the geo information on that, in that photograph, and which will become part of the report. So to that extent, when it becomes part of the, let us say, the IM, or at that point, people know where the asset is located. How is that important? Well, in some cases it might be, some cases it may not be, but it is definitely additional work. And work which is, people are not yet very familiar, but many valuers nowadays do this by default.
Yes, regularly.
They do it by default. Whenever they are taking, their cameras are now fully equipped. When they take a photograph, the geotagging comes with that automatically.
See, this is very useful. Like when we have this, like large fleet of trucks, dumpers at various places, which keeps on moving from one place to the other. The geotagging generally helps to locate.
That is to know the location of a movable asset.
Because for an RP, what happens there is managing a company like that where vehicles are moving around.
In the entire CIRP till now, there were only 2 such instances. This is for immovable asset. You look at the explanation. It is specifically talking of immovable asset, not talking of movable asset. Because there is no cost involved here. If you talk of a movable asset, there is a significant cost.
Yes, yes.
Immovable में खाली कैमरा में एक ऐप डाउनलोड करना है, जाके फोटो लेना है. Okay. Another big doubt which was there in everybody's mind, unnecessary doubt, but a good practice is now being put into regulation form. That valuation report should be discussed with the COC. This wording is wrong. That the CIRP regulations expressly provided the valuation report be shared with the COC does not exist. It is a wrong statement, because only the value should be shared is what the regulations say. They never use the word report. Otherwise, they would have not have been a need to, come out with this regulation. But there I durustai. Now it says, yes, the RP shall share the report. Also make available an opportunity for the COC to interact with the valuers and understand the basis on which they have arrived at their valuation, including any qualifying remarks and disclaimers. So I don't think anything welcome.
Anyway, this is also being done. Most of us are doing it right now. Anyway.
Exactly. Good practice is being, because there are people with doubts. There are always people with doubts. Okay. So better for them, just in case. Okay. Number 10, need for repeating valuation exercise. Now this is during CIRP itself. Okay. There was the provision in the liquidation regulation, which is getting, I think, the correction of that 7 days time is going away when to get it done during liquidation. But now there is the enabling provision to do it during CIRP, but with a caveat. Only if 330 days have gone. Within
Raviji,
330
one
days,
point,
no
Raviji, before we
second
discuss
value.
this, one small point.
One second, Vikram. हाथ ऊपर करने का recognize करेगा तभी, okay? नहीं तो पता नहीं चलता है. Or you switch on your video and raise hand. One of the two. हाँ, बोलो.
So the point number 9, which you just discussed, does it mean to say that, you know, the COC will come to know about the valuation report prior to the plans are opened?
Absolutely. 100%. Yes.
COC will know about the valuation.
Yes.
Prior to the plans are opened.
Yes. Yes. Yes.
Sir.
Rakesh, bolo.
Good evening, sir.
Good evening.
Sir,
Good evening.
we have discussed this with one of the executive director of IBBI. What they are told that market should know what is the value of the company. So we should get a more to more EOI, basically to get a resolution. So not only COC will come to know, all the market participant is also coming to know by doing their due diligence. And one more thing they are planning to change is the COC member will meet
yeah, are you talking of this proposal? Restrict to that.
Okay.
Okay. जो कल करेंगे परसों करेंगे उसके बारे में किसी और दिन बात करेंगे.
सर इसमें एक इशू था. I had pointed out in my comments, sir, कि अभी in COC the promoters are also part of it.
Directors,
right?
Not promoters, directors.
Directors, हाँ, directors.
बहुत
But
फर्क
I'm
होता
sorry.
है. कभी-कभी डायरेक्टर प्यून हो सकता है. प्रमोटर.
हाँ ठीक है, जो भी है तो जो डायरेक्टर है पार्ट ऑफ इट है.
Yes.
Now he is entitled to even the resolution plan and everything. So if valuation report and they ask for confidentiality undertaking, ठीक है. अब if valuation report or the valuer meeting is done with the COC member, तो अभी can you keep the director away? You cannot. You have to keep the director because then he will go to the court saying, this is my right. I am not a voting member, but I am a member nevertheless.
Yes.
So how is IBBI proposing to do this? You know, solve this conflict? Because then what will happen? What could possibly happen is at the valuation level itself, one, there may be some attempt by the directors to engage with the valuers. That is one. Okay. Second, there could be litigation saying either you are overvaluing or you are undervaluing. Because valuation is a matter of perception also. So then this whole confidentiality clause has to be perhaps removed.
At this stage, let me just mention about Section 230, compromise and arrangement, which is the precursor resolution and probably much wider in terms. There, it is mandatory to send the valuation report copy to all the stakeholders. Valuation under Section 230 is mandatory and to be disclosed. It becomes public knowledge. So level playing field, everybody knows it, not just.
So wonderful, sir. In that case, they should say confidentiality undertaking should not be taken. Because on one hand, you are saying keep it confidential.
See, if you remember, the original regulation said LV has to be shared with the PRAs. And then it was removed.
Yes, yes.
Now it seems to be making a comeback.
And now what is happening, sir, even in the earlier days when I handled cases, some places I don't know तभी का regulation क्या था. Now in inspection they are pointing out कि तभी आपने ये नहीं लिया था, तभी आपने वो नहीं लिया था. And these cases were in 2018. जब ये सब regulation ही आधा नहीं आए थे.
Yes. Anyway,
तो ये confidentiality then they should review.
Very valid point that will the directors be kept away from such meeting? To be
how can you? How can you?
then they have to put it in the, no, it has to be come in the law. It can't be by the discretion. Okay.
As
So they have
a
to
matter
say
of
so.
fact,
They have to
sir,
say so, right? And after that, the litigation will be between the Union of India and the so
yes.
that RP is out of the litigation. Okay. Or if not, then how to do? Will it become public knowledge? Because making it public, I think, since the confidentiality is introduced by IBBI, they can dispense with it on their own without even going to Parliament.
Yes, yes, yes.
So that power is with them to make it okay. Now we are talking of repetition of the valuation exercise. Here the proposal is that only after 330 days have passed, then you can, the COC can decide, okay, too much time has elapsed, the old valuation may not be, okay, relevant in today's world, so you can go through another valuation. Now this 330 days, how do you calculate? With exclusion, without exclusion? I am assuming it is the actual calendar days, whatever happened, because technically speaking, Section 12 doesn't allow you to go beyond 330 days. Okay, another welcome step, status of the COC after approval of the plan by the COC. This was a much required clarification.
Here one small submission I have to make, sir. If you all find appropriate. See, when a resolution plan is approved by the COC and it is filed with the AA, the resolution applicant has a skin in the game, right? He has already paid an EMD or he has given a bank guarantee. So maybe the COC word should be replaced by a interim management committee comprising of the financial creditors and a representative of the RA, successful RA.
See,
because ultimately, sir, whatever is going to happen in forward, the RA is the most affected party. So there should be some mechanism to, in all fairness, have a representative from the RA.
Should an RA be part of at least some of the briefings, if not all the decision making? Yes.
Something should be there, because he already paid money, no, sir. He has already paid money, no.
Something which would commercially impact his plan, implementation of his plan, one way or the other. Okay. Nitin, please make note of this, how to include the successful RA in any of the deliberations of the COC, not necessarily all. Okay, it could be briefing sessions also.
Sure, sir. Sure, sir.
Yes. Right? Okay.
Sir, this is, excuse me, can I say something?
Bilkul.
Sir, it's may or shall, I mean, if the company is operational, then it is required to really discuss with the COC everything which is happening. In cases where the company is not operational, it may or may not be required.
That's why it says may.
It says may.
It is for RP to take the call. Does he need the consent of the COC, as well as the COC to say that we want to have a meeting as allowed under the law.
Of course, the important decisions when they have to be taken, the COC must confer. That is important. Yeah. Right. Thank you.
But good governance would say that if things are taking time, call a meeting, online hi kar lo,
Yeah.
At least the briefing. There may not be any decision, but at least updating the COC is equally important.
Yes.
Yeah, it is right, sir. Actually, there are a lot of gray areas now.
Yeah.
It is better that the COC is there, because even after so much of, particularly when plans are taking a long time to get approved, a lot of events happen in between.
Welcome step. Yes.
This is a welcome step.
Now this is, sorry, sir. I think the most difficult to understand. Okay. It involves a bit of mathematics. This is talking of the entitlement to dissenting financial creditor in situations where the operational creditors are proposed to be paid more than what they would otherwise be entitled under waterfall. So like majority of cases, the OCs maybe get nothing, zero, but the RA proposes, yeah, okay, one, he might say, I want to pay workers in full because I need them. Maybe I want to pay even employees significantly higher than what they would otherwise get, and maybe pay something to the trade creditors also. Okay, could be, but many of them may not be eligible for that amount. Now, where is this money coming from? This is obviously coming from the entitlement of the creditors higher up in the waterfall, including secured creditor, unsecured, whoever, financial creditors. Now, in such a case, the existing arrangement, the way it was, is that if there is a FC who dissents, then such an FC will get paid as per the liquidation value, original liquidation value, notional value based on the LV as given by the valuer's report and fitted into section 53 table as drawn out. That is, and now the question is that if the OCs are being paid more than what they would have got, maybe the dissenting FC will turn out to be getting more than what the assenting FCs would get. Now, how do you take care of that situation? This is what is being attempted to be addressed. And okay, I've tried to explain to the best of how I understood it. And I will just put the proposal in front of you. And yeah, okay, this is the regulation that is proposed. It's talking of something now called the realizable amount, which is different from the resolution amount. Now, the realizable amount is what? It is the resolution amount less the incremental amount paid to OC beyond what they would otherwise be eligible under section 53. Okay. And now they're saying that for a dissenting FC, you calculate section 53 entitlement on the basis of realizable amount and not on the basis of notional LV. Now, obviously, some assumption is being made here. The assumption is that the plan is at LV or lower than LV. If it is much higher than LV, this thing doesn't matter because nobody will dissent then, right? If the financial creditor is going to get more, unlikely that they will dissent, or the plan has a payment structure which is not in line with the strategic objectives of a particular FC. That can happen. Some FC might be okay with a 5-year payment structure, and another might say, okay, just tell me what I want get upfront, and I will take it and go. I want to exit. Ye ho sakta hai. So how do you bring that into the method? This is an example I have made. I am not sure I am right. I have tried to give options of how it will look like, that with an example that where the LV is 100 and the liquidation value payable to the operational creditors is 5, just a number. Okay, it could be 0. The resolution amount could be now 110, which is higher than the LV, 100 equal to LV or lower than the LV. Then what is the resolution amount payable to OC? Now this is proposed by the RA. Now RA says instead of 5, I will give 8. He may or may not know about the 5, but says I will give 8. That is higher than what they would get. Then how do you calculate realizable amount? Okay, it will be one of these 3 numbers less the difference. So it could be 107, 100 or 97. I am very confused what it will be because higher and lower. So from what my understanding is that I am confused. That's all I can say about this provision. I have understood the intent to some extent, but I don't know how it will implement. Anybody else who
I had one query here, sir. As far as I correct me if I'm wrong, the act itself says the minimum liquidation value has to be paid by to the dissenting creditor. Without amending the act, can a subordinate legislation like this prescribe anything otherwise? Because if it is a disadvantageous to the dissenting creditor, somebody will go and challenge it in the court, and the court will say, Baba, the act says this and you are saying this. So this has to be perhaps amended in the act itself.
Very right, 100%. Absolutely right.
Because ये क्या है, mathematical exercise पे एक बना दिया. This is a beautiful research paper. But and okay, the intent is very good. The intent is of course very good. But practicality थोड़ा कम लगता है सर.
Yes, why should somebody get more by dissenting than by assenting? Well, the question then comes is like this. Okay. And which is equally strong argument of the other side. That whoever is assenting is doing it knowingly. They know what they will get when they assent. They know what they will get when they dissent. Both. Okay. So then it is commercial wisdom. Why should it be even questioned? Of course, this mathematics part and the act, that dichotomy between the two or inconsistency, that needs to be sorted out. But assuming that gets sorted out one way or the other, commercial wisdom does apply, and people do, do it knowingly. They don't do blindly. I know of one case where the creditor, a large bank, knew they were going to get less if they dissent, but they still went ahead and dissented because they wanted to, for some reason, show that they are dissenting. Could be non-commercial reasons, but hota hai. And it was not even time value, because that can always be a part. Somebody might be comfortable with a certain phasing of payment, another person may not be. But this is confusing. As I said, I have not yet fully understood. I have tried to understand the mathematics, but there are possibilities where the mathematics fails. So, can't say. So we will take that into account, that one, does the parent legislation even permit IBBI to issue such a regulation and make a departure from what is existing? And second is that the language cannot be, it has to be clarified with concrete examples of various options. Otherwise, we will all be only litigating as to what is the pura time isi mein jayega ki number kiska kitna niklega. Okay, so we go to, this is very, very minor, that RP shall open a process email, hand it over IRP to RP to liquidator, the same email shall be maintained. I don't know why they have not talked of that they will create the emails for the IRPs. Why should it be through private platforms like Gmail or Hotmail or whatever? It's so simple that once you are appointed as an IRP, an email
it can be suggested, sir.
Assigned to you by the board. Ye aapka hai.
It can be suggested, sir.
है ना?
हाँ.
And then
तो सब record भी रह जाएगा.
बिल्कुल, और उनका property हो जाएगा वो.
हाँ.
It becomes statutory property. It is nothing about anybody's whims and fancies. नितिन जरा इसमें लिख के रखना. Board can look into allocating emails.
Okay, sir. Sure.
Board ही दे दे या IPA दे दे, कोई ऐसा कुछ हो जाए, whatever. Board may not want to do that, so they may push it on to the IPA.
Ask any institution to do it, designate anyone.
हाँ.
मतलब उनके direction से होना चाहिए. IPS
because फिर credentials उनके पास रहेगा, और credentials उनके पास रहेगा तो automatically transfer हो जाएगा.
Yeah. Okay, this is a problem, that IRP or RP is required to communicate to all creditors who have not filed their claims, but whose records are visible. That means you know that from the records that you received from the CD, these are the parties in the books of the CD. Some of them have filed claims, some of them have not. All those who have not filed claims, the IRP or RP is required to communicate with them and ask them to file claims. And now I will just move to the regulation, then you will, the practical problem will become even more clear. Okay. how the communication is to be done. Okay. Now this is what he's talking of, that through post or through electronic means. That means if I don't have the email, I have to send through post. I can understand the cost involved with that. Email फिर भी चल जाएगा. How do you this additional cost?
Sir,
Of
one more
people
thing.
who are not vigilant of their own rights.
One more thing, sir. If they want to do this, why not simply say that all the people who are there in the CD's books, you categorize it as people who have claimed, and these are there in their books who have not claimed. Recognize both. Instead of having to write to each fellow saying Baba claim de do, let us say you send something by post and the fellow doesn't claim still.
Yeah.
Then what happens?
The problem of picking from the books and recognizing it is that verification step is then missed. Then why even invite claim? Then the next step comes, why even invite claim? That should be only for those people whose names are not appearing. And those who are appearing, we will take it from the book. Then the question will come, books may, books may X amount hai. Claim to can be even 5x because that entire dues are not been booked. Books are not up to date. So many issues are there.
Can I say something, sir?
Yeah.
Yeah. There may be cases where you don't even know the details because you are just able to get the balance sheet, rather download it or get it. The annual return is there with you, but you don't know the details of who the claimants actually are. You don't even know the names and addresses, and where there are balance sheets, the directors are not cooperating enough to give us the KYC of the the people involved. So in those cases, it may not be possible for the RP to really be able to send the.
That is covered in that definition. Known creditor is defined. That which you know about, which means names, details, everything.
Yes, sir. I have one small suggestion. Now, let us say you have sent to the known creditor by post also. Let's say you take that effort and you send it by post also. Now, many a time, particularly it's a small operational creditor, he may not know what to do. You want to be fair to everyone. In that case, what I feel is pragmatic is, one, you take whoever has claimed, you verify, and then you settle the claim ki itna hai, because they have claimed. Okay. And the guys who have not claimed at all, okay, whatever is there in their books, you take it. Particularly, this will be very useful for workmen, employees, people who have left, and you take their names from the company's record.
Yeah, tell me, no problem.
Say that these are the people who are appearing in the company's record, and the RA will have to provide as per the regulation in the resolution plan, something.
Yes. Oh, okay.
So that
Mr. Ramesh, please mute yourself.
Yeah. Sure.
Mr. Ramesh, please mute yourself.
So tomorrow, sir, major problem is happening with the tax authorities. Even after the plan is approved, they are opening up new old matters, passing orders and things like that. So if there are certain things in the balance sheet, we can just show it ki hai, so the RA can address that as per the resolution plan. Uncrystallized, I'm facing this in one case where GST department is still doing its litigation.
There are certain IM documents which very clearly show claims received, claims admitted, claims as per books but not received.
That is what probably is the right thing.
Addresses them in the resolution plan, and where they don't, then they are told, you please address it specifically, how you are going to treat them. Some people say not received fully, we don't pay. Some people say we will pay it on the same basis as those whose claims have come, subject to verification at a later stage. Okay, that they will verify. So yes, disclosure definitely should be done, and but where you don't know, obviously you can't do this.
Thing of writing to everyone is a very difficult thing actually.
Yeah, this is being done for the first time in the sense that this was there in non-statutory process earlier. It was mandatory.
May I interfere, sir? I'm sorry to talk.
Yeah. Go ahead.
I'm Dr. Shankar from Chennai. Actually, as rightly said, I had one case where 2,000 plus operational creditors were there. If an IRP need to address all the 2,000 plus, the whole time of 1 month will be wiped out only in addressing the operational creditors. Nothing will move from that side actually. So it's a very difficult proposition to do this.
Sir, especially the workmen. I'm sorry, can I just say something?
Yeah,
especially the workmen. It may be very difficult to be able to get the details and to be able to write to the workmen. Maybe you get, maybe there are 500 and you're able to get only for 10. And then there will be trouble in the long run. They will come back and say, ki, hame to mila nahi, inko mila tha. And, it may create problems, especially for workmen. For FCs, it is okay. For OCs, it is difficult. But for workmen, it is extremely difficult.
So, sir, what I am doing in one case now, currently I am handling one case. There are some 1,000 plus workmen and hardly 200-150 claims have come. So I have simply demanded from the management कि आपका पूरा payroll मुझे दे दीजिए, आपके पास कितना outstanding है, आपके हिसाब से उनका दे दीजिए, हम उसको इसमें डाल देगा. As not claimed, but with the name.
Yes, claim not received, but appearing in the books of account.
With the name of the person. Yeah. Luckily, chalo, this company has the books of account to some extent made, तो मैं बोला जो आपके पास है बैलेंस शीट में, मतलब आपके इसमें है, वो मेरे को दे दीजिए, मैं तो IM में डाल देगा और सब में डाल देगा, है ना?
So this proposed regulation 6A should be best effort basis.
Something like that, sir. Something like that.
On the best effort, it cannot be made mandatory in all respects. But not doing it, yes, the RP should have a valid reason by Q, and record it also.
Agreed,
and
sir.
Make it part of the COC
Yes,
minutes
yes.
as to why this has not been done.
Agreed, sir. Agreed.
Sir, so one small thing is recording the reasons and all may be fine, but still the reason what I say may not be that much convincing for the other person who is going to review.
That's okay. That always is true.
Because as I told you, I see in that particular case, there was only one financial creditor, and 2,000 plus operational creditors, and nobody ranked for 10% to become a member in the COC also. So such is the difficulty that we practically feel. So this particular clause need to be revisited. Rather, you can even remove it for the time being, because we don't have that much of infrastructure when we enter into a company for a CIRP. The IRPs may not have that much of infrastructure to address 2,000 plus operational creditors and get the details from them.
Okay. So resources and infrastructure available with the RP may become a hindrance in complying with this regulation.
Yes, sir. 100%, sir.
Yes.
Really, I'm telling you, sir.
And somebody from the other side will come back there, then don't take up the assignment or use the IPE. All that will come.
Yeah, that's correct, sir.
But we will still not pay you.
No, most of the IPs here, we are now rethinking, should we continue this business?
Yes.
Really? We are ready to walk out, actually.
So on a lighter side, IBBI may say, we have now made a minimum fees, which is good. So you please do all this.
Okay, so that completes what we had, all the 14 proposals. Yes. So anything further to be, Nitin, where are you?
Sir, I am here only.
Note कर लिया ना जितना
कर लिया sir. हाँ जी.
Okay. Mr. Ramesh, you wanted to say something? Your hand is raised.
Yeah. See, there in the regulations mentioned, verify books of account. I have already shared in the chat. And as a liquidator of one government company, I face the problem of not getting the postal address nor the email address. So books of account will not give the details of the creditors or whatever. So I also endorse the views expressed recently by most of the speakers that getting details also will be a very big problem, and it will lead to future litigation. If someone is already in the books as a creditor and you don't get his details at all, and it will lead to a lot of litigation. So this aspect should be seriously looked at. Thank you.
Anything else? Okay, I think that concludes what we had today. Nitin, over to you.
Thank you, Ravi.
Sir, thank you very much. To all the participants also, thank you very much for taking your time for this roundtable discussion. I have partially noted the all the points that have been made, and I'll be again going through the recording, and so we'll make a compilation of all these suggestions that are there. And in case any clarification is required, I'll definitely also connect with the concerned IP.
When do you think these regulations will come, Mr. Nitin? ये कब तक आ जाएगा?
We don't know. It will be after the last date for the filing.
What is the last date? What is the last date?
It could be the day after that, or a week after that, or a month after that. That depends.
Because I have really seen
feedback is there.
Or it may not come like code of conduct for COC.
No, all those which do not have a issue or which they have not received definitely will come fast. Some of those which some legal issues are pointed out, they will refer, take advice, and then decide.
So actually, I really don't understand this whole thing about code of conduct. This thing. See, IBBI, just like SEBI, anyone who is rendering service in the capital market has to be registered with SEBI and has to follow the rule. So why can't it be that anyone who is rendering service in whatever capacity under IBC should also have to follow the IBBI guidelines? So under that, a guideline for COC can always be there.
COC doesn't render service.
So whatever they are doing, sir.
They are decision makers. So there's a different, and they have a different regulator. See what happens.
Sir, banks
let me just give an example. Okay, when two regulators can talk to each other and come with a combined understanding, then what? See, the way Ministry of, let us say, Commerce Ministry and Ministry of Finance, it's a classic case, anti-dumping duties. Now, one ministry conducts the entire investigation, another issues the notification. They work together. Now, same thing can happen here, that you give a draft paper, let it go to RBI, RBI issues it, every bank will follow it. Majal hai ki na bole. But the guiding principle in human interaction is my boss has to tell me. Your boss telling me doesn't work.
Precisely.
So it has to come via RBI. Now, it is not difficult for IBBI to sit across with RBI and come with a draft code of conduct for COC. काम हो गया. एक दिन का काम है. अगर करना चाहे तो there are always ways.
Actually, another thing, I don't know this of this subject. What happens is when you want to keep the corporate data as a going concern, particularly utility bills and all that, now this law says the essential service is to give supply for electricity for your office and this thing. But what about the factory?
It is not considered as essential service, but it is considered as critical supply.
Now it is what happens.
Another section which talks about it, and it is all discretionary, which means basically sub karne ka hai, but power question.
That's exactly what I'm saying. So now I'm facing a case where they have cut off the electricity. They say office ke liye de dega, but factory chalalne ke liye nahi dega.
See, on this there is a judgment actually, which is very specific, which says that if you want to continue with critical supply, you have to continue making current payments.
No, that is right. That is right. We are saying that. And they are coming up with a lot of judgments. The MECDCL has written to me a beautiful letter, very well researched. You know, and I have also written back to them, Baba, तुम factory बंद कर देगा तो फिर ये कैसे चलेगा? You know, but they said no. My legal department will say then only I will restore.
No, but there is an answer to that, really speaking, and that is an answer which we are not looking at. Whose benefit? Not the Department of Electricity Board. Ultimate benefit, secured creditor. Why they can't finance it? That is a question which is neither being asked nor being answered. Arey, wo karo. Everybody wants the government of India to. Who is ultimately Electricity Board? People of
Government
India.
of India, yeah. Government of India in a way,
People of
directly
India,
or indirectly. Yeah.
the government is a fiction. You and I, all that we suffer. Why should we pay for something which is a commercial matter? Which the committee of creditors is well equipped, which is their business. See, it is their business to lend money. What prevents them from giving interim finance?
Nobody gives.
Nothing.
That is the problem.
So they will say, "Band hone jaane do, kuch nahi. Mera file clear hona chahiye, bas. Pay operation should be successful. I don't care if patient dies." Is the attitude.
ये आप सही बोल रहे हो, sir. You are actually saying very true, but then.
Gee, that's why never. I would, this is my humble request to all IPs. Don't talk of department electricity not giving. Say my creditors are not giving me money to pay the bill. They are
you have a very valid point. You have a very valid point.
Getting away scot-free under the so-called commercial wisdom.
Sir, that is true.
Money is commercial wisdom now.
Sir, you are saying the truth. Actually, COC is not giving that interim finance which they are.
But why should the RP then start saying department, the state government should give, which in turn is ultimately people of that state suffering? Because who is going to bear that loss?
No, responsibility is cast only on the RP or IRP to restore the power, sir.
There is no responsibility. Please do not understand that way. The responsibility is only for office lighting. You make all the necessary moves. And if nothing gets done, go to NCLT. Your responsibility ends there.
Yeah, case to case, we need to go for the NCLT, sir.
Yeah, but it is not. If you do not manage to get a power connection, will you be hanged? No law in the world can do that to you. Unless, of course, it is proven that you are sitting in your house and not even going and making any effort. That's the So going concern is something which is misunderstood by everybody, including those in whose domain the only definition lies. Okay, accounting standard is the only place where going concern is defined. And once you read that definition, then the big question comes up. How can a company which is under insolvency even be called a going concern?
That is true. The liquidation as a going concern is a absolute. I couldn't understand that concept itself. How can you liquidate without dissolving a company?
Actually, it is not liquidation. It is a withdrawal of the liquidation order. That is really what it means. But that's okay. But managing as a going concern, the way it is understood by people, IPs, many of us, we get carried away by saying, "Mujhe sab kuch karna chahiye. Electricity board is not giving me power. MIDC is not giving me water." Why? ठेका ले रखा है आपको देने का. क्यों भाई? For a private benefit of a particular company, why should the public suffer? Because these are public bodies. Why should they suffer? And the only people who are only affected either way, positively or negatively with that decision, they are not least interested. Unka to koi bolta nahi hai. So we need to move the needle to point at the people who are actually responsible. They are getting away scot-free. अभी तो विदर्भा judgment आ गया ना. Now even admission will become difficult.
Yes, that judgment was quite quite a judgment. It's quite a judgment.
मजा आ गया पढ़ के पहले तो
मैं भी पढ़ा वो मैंने ऑलमोस्ट सारा पढ़ लिया ऑलमोस्ट
उल्टा हो गया but then the logic was impeccable.
नहीं well reasoned judgment sir.
And that contributory negligence of NCLT Calcutta, these two judgments, the contributory negligence judgment of NCLT Calcutta,
yeah,
these two are definitely going to affect many admissions.
Absolutely. Yes, they will. Where it ought to.
Yeah, but only that contributory negligence, I was a little when I had a small disagreement with that, you know. Of course, I have to now refresh my memory with that judgment, but I
no, that was very simple. X amount was to be sanctioned, disbursed. Half of it was done, the rest was not done.
No, sir,
by the time the payment, fell due for the part 1. So that is how it goes.
होता क्या है ये contributory negligence वाला clause में ना सभी कुछ भी admit नहीं होगा for the simple reason it is either bank not disbursing, bank is not disbursing because of XYZ reason, you know, after having sanctioned. So ये थोड़ा सा I thought the NCLT though order may be
नहीं, ये BIFR, it will go the BIFR way. It will go the BIFR way.
हाँ वो थोड़ा I thought the NCLT got a little carried away with that. I thought so. It is not always, because I have seen couple of cases कि पूरा ही फर्जी था project.
But then again that other question comes, अगर आपको मालूम है fraud है तो आपने क्या किया? Complaint करा?
Problem तो वही है ना सर, कोई complaint.
तो see, that's why the people who are in the position to take action, when they don't take action, you can't transfer that burden to the courts in the country. That is what it really tries to say. कि अपना घर संभालो पहले. If the creditors are vigilant, 90% cases will vanish. आएगा ही.
That is true, sir. That is of course true. Then the lending itself will become very distinct. हमारे यहाँ तो देखिए सर क्या होता है, कोलैटरल का ऊपर लेंडिंग होता है, बिजनेस वायलेबिलिटी वगैरह तो बहुत ज्यादा कोई देखता नहीं है और कोई समझता भी नहीं.
ओवर वैल्यूड कोलैटरल पे लेंडिंग.
हाँ, ओवर वैल्यूड कोलैटरल वो तो ठीक है, चलिए वो लेस इज द बेटर, बट जो एंटायर प्रोजेक्ट फंडिंग या जो भी होता है वो कोलैटरल पे होता है. कोलैटरल पे देते हैं, वो प्रोजेक्ट की वायबिलिटी थोड़ी देखते हैं.
चलिए,
थैंक यू सर, थैंक यू वेरी मच, वेरी इंफॉर्मेटिव डिस्कशन.
Thank you all very much.
Thank you.
Those who attended and participated. Thank you.
Right, sir. Sir, thank you very much. Again to the participants also. Again, thank you very much for joining us. We shall, very frequently be conducting roundtable discussions on important subjects. So thank you very much. Thank you.